Welcome back to the channel. I'm Bitcoin Ratchi, your favorite Bitcoin maxi with a sense of humor, zero tolerance for pump and dump tech tokens, and a bad habit of telling ETH maxis the truth. So there are some fun things happening in the market right now. Ethereum is going vertical. Spot ETH ETFs are trading. Bitcoin has smashed through $120,000, and ETH maxis are throwing around $10,000 price targets like it's 2021 all over again. Your group chats are buzzing. X is a sea of green candle memes, and even your cousin who swore off crypto last cycle is texting you about buying ETH. But the real question is, how high can Ethereum really go in 2025? And maybe the better question, what happens after the hype fades? Let's start with what's currently driving the pump. Ethereum has broken through major resistance levels and is putting in its strongest weekly candles in years. We have spot ETH ETFs now live in the US, sitting right alongside Bitcoin ETFs that kicked off the institutional wave last year. Billions of dollars worth of ETH is now locked up in staking contracts, which reduces liquid supply and adds to the bullish momentum. Layer 2 networks are exploding in activity, making Ethereum faster and cheaper in certain transactions, and yet somehow the ultrasound money meme has crawled back out of the bear market basement. This is the perfect storm for short-term euphoria, and right now traders are absolutely loving it. But to understand how high ETH could go, we have to zoom out and see the bigger picture. Global liquidity is improving. Central banks may not be cutting rates yet, but the markets are forward-looking, and risk assets across the board are rallying. Tech stocks are ripping. AI hype is still in full force, and that excitement is spilling over into crypto. Bitcoin ETF inflows are also massive, and when the number one asset in the space is in price discovery, it tends to pull the number two asset, which in this case, Ethereum, along for the ride with it. Macro tailwinds matter, and right now, Ethereum is benefiting from the same institutional attention that Bitcoin has enjoyed all of last year. So how high can ETH really go? In the last bull market, Ethereum peaked just under $5,000. This cycle, with Bitcoin already above $120,000, ETF inflows building, and alt-season energy starting to bubble, a spike to $6,000, $8,000, or even $10,000 isn't impossible in a blow-off top scenario. In the ultra bull case, the ETH to BTC ratio climbs back towards 0.1, ETF demand pours in, and retail FOMO sends Ethereum to numbers that is going to break all of your price trackers. But here's the thing, it's not guaranteed. Retail is still licking its wounds from 2021 and 2022. A lot of people bought the top the last time, held through the crash, and swore off crypto forever. Without that full-blown retail mania pouring back in, the parabolic spikes we saw in the past cycle might be much, much smaller this time. And maybe, just maybe, we don't even get the same 4-year boom and bust patterns anymore. The ETF era could mean a slower, steadier climb for Bitcoin with less room for altcoins to go completely vertical. If Bitcoin grinds upward instead of exploding, Ethereum and the rest of the market may just tag along, instead of stealing the spotlight over and over again. And then you have the built-in problem with Ethereum. Its rules can change. Its supply can change. The roadmap changes all the time. Governance is basically a foundation and a handful of developers deciding what happens next. That's fine if you're building apps on top of it, but if you're trying to store wealth for decades, you don't want your money run like a Silicon Valley startup. Bitcoin doesn't have that problem. Its monetary policy is set in stone. The supply is capped at 21 million coins and it's not changing. Ever. Ethereum also has risks that people gloss over during pumps like this. Staking is heavily concentrated in a few providers like Lido and Coinbase, which introduces centralization points. It relies on layer 2 solutions for scaling, which add more trust assumptions and more attack surfaces. Proof of stake security is also heavily dependent on incentives, and if those incentives weaken, so does the network's protection. And to top it off, the entire ecosystem depends on developer cohesion, something we've seen fracture in other chains when disagreements arise. It's a great platform, but platforms aren't forever. Bitcoin's store of value case is. And if we look back at the history of ETH pumps, the pattern is clear. In 2017, ETH pumped over 12,000%, then lost 85% of its value against Bitcoin. In 2021, ETH doubled its BTC ratio, then gave it all back within a year. Every single cycle, ETH outperforms during the mania phase, but when the dust settles, Bitcoin reclaims dominance every single time. So here's my take for 2025. If you're a trader, this ETH pump is pure opportunity. ETF hype, staking narratives, and alt-season energy could absolutely push it higher. And yes, it's possible that ETH surprises to the upside if retail mania somehow reignites and macro conditions stay perfect. But if you're thinking long-term, 10 years, 20 years out, Ethereum is still a moving target. Bitcoin is the base layer of global digital value. One is a wave, the other is a tide, and the tide always tends to win. Now, Ethereum's pump is fun, don't get me wrong, it's exciting, but it's also temporary. Bitcoin is forever. So are you riding the ETH wave, or are you stacking sats for the storm? Let me know in the comments below, and don't forget to subscribe. I'm Bitcoin Ratchy, stay based, stack sats, and remember, not your keys, not your cheese. Ratchy out.